The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, there's a growth and income stock that we've talked about here before that's apparently still growing. Our growth and income strategist, Todd Bunton, is going to fill us in on the latest progress. And so the company is DineEquity.
That's right.
Now, they franchise out and they operate the popular Applebee's and IHOP restaurants.
That's right.
So it's been a while since you and I have talked about this, but you say they're still growing, huh?
Yeah, they're doing well. They just delivered their fourth quarter results back on February 25th. And if you look at same restaurant sales, very solid. At the IHOP brand, they're up 6.1% year over year.
Wow.
And over in Applebee's, it was 2.8%, but still very solid. For IHOP, that was their strongest same-store sales in over a decade. And for Applebee's, it was their strongest since 2011. And part of the reason for that is lower fuel prices, so that means higher discretionary income for U.S. consumers. Also, an improving labor market helps. But that solid top-line growth has fallen almost all to the bottom line. Like you said, they franchise out most of their restaurants,
Right.
so they really just collect a portion of the sales from their franchisees.
Sure.
They have really low overhead, they have low capital expenditures, and all that falls through to solid cash flow, which allows them to pay a solid dividend, which I'll talk about in a second. But after their latest beat, analysts revised their estimates significantly higher for both 2015 and 2016, strong enough to send it to a Zacks rank of 2, which is a buy rating. You can see nice solid increase in consensus estimates for 2015 over the last several months, really. They've delivered a string of positive earnings surprises going back several years, and just nice increase in consensus estimates. So very good earnings momentum, good growth expected this year, and then, as I alluded to, a very solid dividend.
Yeah, 3.3%.
Yeah,
Wow.
that's one of the best in the restaurant space. I brought with me a comparison of Cracker Barrel, Brinker International, which owns the Chili's and Maggiano's brands, EAT's their ticker symbol, and of course Denny's.
Yeah. Yeah.
And you can see really pretty solid earnings momentum throughout the group right now. Again, a lot of that's nice tailwinds from lower gas prices, but DineEquity pays one of the highest dividends in the space.
That's interesting.
And in terms of valuation, they're not cheap, but they're, I would say, cheap relative to their peers. You can see Cracker Barrel and Denny's, their forward PEs in the 20s. DineEquity trades about 18 times forward earnings. So there's really a lot to like about this brand. Again, they're heavily tied to the U.S. consumer. So if the labor market starts to turn south, or gas prices start to surge back up, that might put a halt on their progress here. But so far, things are looking so good for 2015 here.
All right. Well, do you own them?
I do not.
All right, check out other stock picks and stock picking strategies on our website, Zacks.com. Link to them right off the homepage. With Todd, I'm Terry Ruffalo.